guys, welcome to These Are Solutions, and in today's video we are going to see the necessity for a trading bot as regards to your crypto trading activities. That is, we are going to see for the necessity or the reason why we need a trading bot. Fine, you may feel like, okay, you have the technical analysis, you have the technical knowledge, I mean to say, and you have the fundamental understanding about crypto trading, but there's this gap that trading robot has actually come to fill, and that is what we're going to check out in this video. So while I head on straight to my write-ups here, so here, necessity of a what trading bot, and as you can see, the cryptocurrencies are known for being extremely volatile and prices fluctuate drastically even in the space of minutes. As in, when you say volatile, volatile means what? The rate at which a coin can actually move. For instance, a coin can actually move from, like, let's say $10 to $60 within an hour, and if you are not there to catch up with it, that means you've definitely missed out on that trade. And this is what it means by what? Extremely volatile, extremely volatile, extremely volatile, and prices fluctuate drastically even in space of minutes. It means that what? The price can actually fall back in space of what? In few minutes. So investors have the opportunity to participate in cryptocurrency trading around the world and at any time of the day. The combined effect of these factors limits the effectiveness of human cryptocurrency trading in a lot of ways. What does this simply mean? It means that due to these fluctuations and the extreme volatility of that coin, that humans, that is you and I, can actually what? Miss out of such trade. And those are the main factors that limits what? That may limit our effectiveness when it comes to what's taking advantage of crypto trading. And let's continue. Investors in many cases are unable to react quickly enough. They are unable to react quickly enough. I want to highlight that. Quickly enough to changes in the price to achieve the optimal trades. Investors cannot dedicate as much time to the cryptocurrency market as necessary to always achieve the best trade. What this simply means as well, like 247, the crypto market doesn't sleep 247, unlike the forex trading where they trade from Monday to Friday. Yeah, but cryptocurrency is Monday to Sunday, from Monday to Sunday, all over and over and over and over again. So tell me, will you want to stick to your charts and because you have other things doing? Because you can't just say you want to sit down in front of your screen watching 247 and waiting for a coin to drop and waiting for a coin to buy. I want to show you an instance where this is Binance, right? This is Binance. So let me take, for instance, look at BTC. I think because I want to make an instance. Look at from here. From here, you can see how it moved all the way up, all the way to this place, and it is still what? And it is still moving. This was around this was in 2020. It's actually opened at the rate of 10,237, 10.62. It went high to 10.797 and low to 10.191. As you can see, the difference. That's just an instance. Then let me use another example here. This place now, it's this is on the 2021, which is February, right? It's it opened around at the rate of 38,866. The highest it went that day was $46,833, $833.30, and the low it also went on that day was what 38,000. I mean $38,020. So you can see, look at the difference, look at the gap, and there's every tendency that you may not be on that chart as in staring at it at that right time, because you never can tell the exact time the movement is going to come. You never can tell. Now let me minimize and continue with this. Investors cannot dedicate as much time to the cryptocurrency market as necessary to always achieve the best trades. That will require round the clock, you can see, round the clock monitoring of cryptocurrency exchanges all over the globe. This is where crypto trading bots get into the picture. They are nothing but automated tools that conduct trades and execute transactions on behalf of human investors. What does it mean? It means that, well, they are automated. When you set it, input your settings and you are good to go. You can just go to sleep, continue with your other work that you have to do for that day, and let the bot do its work. It works. Now, what are crypto trading bots? If you want to ask, crypto trading bots are a set of programs designed to automate cryptocurrency trading on your behalf. Typically, the investor or trader will have to pay attention to market statistics and play a crucial role in practicing the trading, and then pick which cryptocurrency to buy or sell and at what time. Crypto trading bots can easily automate the analysis and interpretation of market statistics. They can gather market data, interpret it, calculate potential risk, and execute buying, selling cryptocurrency assets. It is the hiring an expert to do crypto trading for you while you sit back. I love this place. While you would sit back and watch the profits grow. For example, you can set up a crypto trading bot to purchase more Bitcoin when the price goes lower than a specific limit. Crypto trading bots can often save you a lot of time and more cost effective than hiring human experts. So what this simply means that what it saves you time. Maybe you work a 9 to 5 job, or you do other things. Even if you stay at home mom, you still need to take care of your home, take care of your children and the rest. You can't say because you want to trade, you want to make money, you are just glued to your phone. No, that is not how it is. So that is why Royal Q has come to stay, and this is Royal Q here. This is what the bot does. It helps you to buy. That is why when we go to your quantitative settings, this trade I'm running around it currently on, I have a trade running. This is already running to profits. The ones I entered before, they are yet to come into profit, but they will eventually come up. So look at this place now. When I click on, for instance, I click on 1 inch, what it does, I will have to what, come to my settings, click on my trade settings, impute what I need, that is what I want the robot to do for me. You can see first buying amount, margin call, take profit ratio, earning call back, margin call drop, buying call back. I'll be explaining this in my next video if you want to know what all this means. But right now I'm just telling you the necessity of trading bots in the market, why you need it. So when you tap on the trade settings, you can see margin call limits, take prediction profit, which profit you want it to get to before it comes out of the market. When you click on margin configuration, you can see this is where you set in how many times you want it to go and at what percentage do you want the market to drop before it spikes again. So this is what the robot does for you. And one good thing is that your money is not on this robot. Your money is on what? Is on your Binance here. Is here, is in your wallet. This is where it is. It is kept on your wallet. The trading robot doesn't have your money and it doesn't have access to your money. So that is exactly why I'm making this video, for you to understand what crypto trading robot is all about. If you are yet to know about it, if you do not understand, I hope I've been able to, I don't want this video to be unnecessarily long, but I believe that if you have watched to this extent, you know how to, you understand what a robot does, and the if there's any risk, if there's anything that you don't understand, you can drop it in the comments section. And there's something I also want to talk about here, which is very, very important as regards to, let's say, um when you are trading, because you believe that you have the idea, you have the technical knowledge or the fundamental knowledge. Look at in this situation, maybe for instance, at this rate, which is around $42,000, and maybe what you have was $100, and you put in $100 for this trade, and you are seeing it going all the way down to this point. What will you feel like at that moment? If that money was meant for other things, that you feel like, okay, let me quickly make money and get out of the market, at this point in time you feel like selling it at a loss. And that is one good thing about the robot is that, for instance, you bought at this point, you can decide that, okay, when it gets to this place I want to sell. And maybe and you decided to sell, fine. And for instance, at this same point, some people will get in at this same point and find out that what, it is dropping. But what the robot does is for you to buy, it does something called dollar cost average. That is, when that without your $100, you are not putting in everything at the same time. It can be, take the first buying amount to be $10, so that when the market drops, it buys for you again. And when it gets to this place, maybe due to your settings, it will sell. And when it gets to this place again, it gets to this place, when the market drops, it will buy for you. Remember that it's sold here, then it bought around this place again, because it keeps on buying the dip. That is good thing about the rub. It kept on buying the dip for you. And when it goes to this place, the market is not moving up again, it will buy for you. Maybe just using that your same $100, but it's in different um prices, not using all the whole of your $100 to buy, but taking them in bits by bits. Maybe you put in your first buy to be 15, it would be going in bits by going there to be taking it $15 to buy for you. And maybe it got here again, it will sell for you. When it comes to this area, it will buy. When it gets here, it will sell. And if the price is not moving up and it comes down around this place, it will still buy for you. Now look at something. It got here, it will sell for you. It comes down again, it will keep buying. This way, you are not putting all your money, all your $100 at a go, which will eventually lead to loss. But with the help of the trading robot, it will buy at different prices. Even when the market is dipping, by the time the market is moving up, it is bringing all the profits up all the way down, as in from down, bringing them up for you to benefit. So in this as regard to this trading robot, it doesn't incur any loss except you decide to sell a loss on yourself. But the way it is buying, there is no way it's going to incur loss because it is buying at different prices and the market is not stagnant. It is moving up and down, moving up and down. So the more it moves up, it sells. When it goes down, it's buy for you. It moves on a little bit, it's sell. But you can't be there to monitor it. So that is what the robot does. So I believe with the help of this explanation, you understood what is robot trading, and you see if it is something that you find interesting. You can check the description box if you want to get to know more about it. You find the link in the description box that you can message me or and any other details that you will need. So see you in my next video. Bye.